Good morning, good evening, good afternoon, depending on where you are in this world. This is Hajin Lee, and I want to share with you some pretty interesting patterns. My YouTube channel has been temporarily been inactivated, but I'm back. Now, back when we were having this very scary March 2020 crash, from hindsight, it all turned out to be nothing more than a left shoulder, head, and then the right shoulder. So it was an inverse head and shoulders. You can then see how a larger one was set up with a left head and a right shoulder. And sure enough, the breaking to the upside of the neckline led to a very, how should I say, massive upside. Now at hedging.com, members received this alert before it even happened, while the right shoulder was being formed back in February, although we entered at 17.4K, we saw this as a continuation of a bull market reversal, where this became clearly the left shoulder, and this was the defined right shoulder that completed, and then the head. Just about every bottoming or reversal from a bear market to a bull market has some kind of a pattern. Here in 2018, although this is not usually a bottoming pattern, we clearly had a rising, ascending triangle on which members entered on the break of that line. But just as here, we had a small inverse head and shoulders growing to a larger head and shoulders. I call that the pagoda effect. And you won't really find that in any of the books. And this pagoda effect is a reflection of a very bullish market. So we have one inverse head and shoulders. What if I drew another line maybe across here? Okay. And maybe the price will do something like this. It'll have a nice correction, touch the neckline again, go back up, touch this line, and do something like this. Thereby, we now have a larger left, head, and right. Ignore the timelines for now. If I then draw a 2-point trend line like this, what if we went up to maybe 94,000 or so, wherever that exact point might be, and price did something like this, took a big dump, but now we see how this whole setup can become a very much a larger continuation of what we're seeing here, but being built upon it in a pagoda effect of 1 layer, 2 layers, 3 layers. Now with inverse head and shoulders, one way to measure approximate distance of a target is to go from the bottom of the head to the neckline, and if we do that, we can get an approximate rough idea, 500,000 buckaroos. Therefore, I think patterns are not antiquated. They're not useless. They work. As we can see both from hindsight and as we projected it here, and as we will maybe project, they're not guarantees. But many are out there saying, oh, they don't work anymore, because everyone knows about it and everyone can expect it. Oh boy, no one really expected this head and shoulders top, and then a larger head and shoulders top, to which on hedging.com members got this line as the line in the sand to GTFO. And if you haven't yet, you're going to lose a lot of money. Sadly, many did not GTFO, and many did, and preserved their profits all the way from approximately 4,200 to somewhere around the low 40s. And we would like to repeat that. And this is one way we are looking at how the market might be going and progressing to repeat a massive profitable entry and exit. Have a good day.